welcome back to another video. So I'm back with a trade breakdown. You guys probably saw made a post telling everyone, come back to the Telegram main chat. I think I've managed to get the bots under wraps. For those of you that don't know, for some reason, my chat got spammed with a lot of bots, and they were just so non-stop that I just turned all the messaging off, where only I was able to message. But I think I've cleared almost all of them out, so I've turned the chat back on. You guys can come there, when you need help, when you want to ask about the content, the YouTube videos, etc., whatever it is. And there's a bunch of other well-educated people in there who'll be able to help if it's not myself. So yeah, that's first things first. And now the trade breakdown, as I told you guys, if I'm getting good setups, if I'm publishing something, then I will try to make a video, try to give you guys a bit of insight on what we're watching, what we want to see, if I did take an entry, why I took an entry, and the trade management behind it. Just giving you a lot of live time examples. And today I even sent in screenshots of the exact guidance I was giving to my mentorship chat and how they handled it, and it was very, very positive from the whole group. So today's video might end up being slightly longer, but we will cover the London session and the approach to the New York session, because we did also try to trade that, but nothing was really offered. And essentially why I took the trade in London, why we didn't take a trade that was potentially offered in New York, and how we dealt with it. So let's get into it. Now, what's important, and this might catch a lot of you guys off guard, right? Might think it's a bit unfair, is sometimes, right, what happens is this chart, right, I want you guys to look at this. This is DXY on capital.com, right? Well, now we're going to go to a DXY that we normally use, which is the TVC. If you can't tell already, I would say that looks slightly different, right? Right, so that's our Monday candle, Tuesday, and that's today, which is Wednesday. And of course, price has not hit the weekly fair value gap on the TVC. If we go back onto the capital.com chart, we can see completely different candles, and today has actually hit the weekly fair value gap, right? Now, this comes down to a few things. The capital.com chart has a different daily candle start time, I believe. The 4-hour candles are also slightly different, and of course the print itself seems to be different, right? And this is because TVC was closed on the Monday, so the chart became a bit weird, and capital.com was not. So when Trump was speaking on the Monday, when he was inaugurated, they're speaking on certain topics, DXY was dumping, TVC was just frozen, and capital.com was operating as normal, and we saw the downside move. So cool. We had this downside move, right? And you can probably look at these candles. I think they look a bit weird, right? Why do these two candles look a bit weird next to each other? What you will notice between other candles, the close of the previous candle and the open of the next candle are usually pretty close together, right? This candle closed here, the next one opened there. Closed here, the next one opened there. That's not a massive gap. That's, there's a small gap there, not massive. Closed here, next one opened there. Closed here, next one opened there. This candle closed here, and the next one opened all the way up here. So when the candle opened up here, what I said to my group, right, or at least the mentorship group, was, look guys, I know from this big bearish displacement, it's very likely that we are heading towards this weekly fair value gap. But you know what? I'd rather be a bit patient. I'd rather sit on my hands and let's wait for confirmation. We're about halfway in the range. We know we have an accumulation here. Big move down. What if price just reverses on us, right? I wasn't sure. And now I want you guys to think back to the previous weekly outlook. We spoke about one concept specifically, right? Which was the candle formation. I know I'm throwing a lot of information at you guys. You might have to rewind, go over some bits. But what I said to you guys was, look, if this candle prints, right, now we sort of get nudged and we get told, like, look, this is our target. It's very likely price is heading for this, right? But perhaps you're not completely sure. So what do we say? We say, let's let a candle print. Maybe we let 2 candles print. So we let the following candle print, right? So when this candle printed, now it was extremely obvious that this is our target. The weekly fair value gap should be getting hit. So now when today's candle came, it was very obvious that at a bare minimum, we would like to trade towards this, right? So that sort of sets the background context. It was a bit of a whipsaw, lots of volatility, but it became very obvious at some point that, look, we want to trade lower. We want to hit this weekly fair value gap. Once we hit that, we will reconsider. But of course, because it's the obvious drawn liquidity for the time being, let's just trade towards it if we are offered something, right? So now we had today's daily candle. We'll go to New York opening, midnight opening price, right? Quickly. Right, that's your New York midnight opening price. Sorry, I'm not sure why I'm saying New York in front. It's just the midnight opening price. I was meaning to talk about the New York session, but we'll come back to that in a second, right? So essentially, this looks like, before I even get into the setup, what I considered, why I traded, blah, 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 this just looks like a very, very textbook day before we get to New York, right? Up until about this point, looks extremely textbook. Once we get this reversal, it doesn't look so textbook anymore, because you have accumulation, manipulation, distribution through the midnight opening price, and then of course the hit of the drawn liquidity, a retracement, and then from there we wanted potential continuation, right? But essentially, accumulation, manipulation trades into yesterday's candle, right? And if we go on the 4 hour specifically, right, we traded into a 4 hour fair value gap. So this is our London candle, right over here. This 4 hour candle, this traded into this 4 hour fair value gap, and from here we got a bit of a move starting down. So cool. How did we approach this? And again, hopefully a lot of you guys watching this would have seen the screenshots I sent in, and you would see specifically what I pointed out, right? What I said to the group was this sort of range, right? We've had the run up, and now we're getting a kick down, right? And you've got a bit of an OTE going on here. So how would I have approached this setup, right? Sorry, there's a lot of lines, so I'm going to get rid of the session indicator just so things are a bit clearer, right? And we'll get rid of midnight open price. Hopefully, just from that explanation, you understand the significance, right? The candle's opened, manipulated above, hit a 4 hour fair value gap. Then we've got displacement through the midnight opening price, which suggests to us that, the intended move is in this direction, which is already in line with our expectations, right? So cool. Why is this so interesting to me, right? So we've now had that manipulation above, and then we print a fair value gap. That's what's significant to me here. 15-minute, we print a fair value gap going into the session, right? Very nice. That, just generally when we see fair value gaps coming from a high time frame PD array, it's displacement essentially, right? So then price trades lower. I know this isn't a sort of textbook market structure shift just yet. If you look on the 5-minute, you guys will see, if you sort of treat this low as your significant low, then it is. But on the 15-minute, I know it's not, right? So let's just stick on the 15-minute. So what's significant here is that we make the fair value gap, we trade a little lower, we come back, we respect this fair value gap, and at this point, you can probably start recognizing, you know what? This looks like a very textbook accumulation, manipulation, and now the distribution begins. So how could you have entered this, right? Very simply put, on the DXY, which I've taught you guys, right, we can use something called a sell stop entry, right, which would mean it will be a buy stop entry on Euro USD. We'll get to Euro USD in a second. Sort of mirror this. What we would have done is we would have protected this high, right, and we would have traded towards this drawn liquidity, which would have given you guys about 2.3 R, right, at least on the DXY. We'll come over to Euro USD and see how much the actual RR was, right? So what's sort of happening here? When is the entry occurring? You're seeing a fair value gap get created. You're seeing price trade into this fair value gap, which is also a OTE, right? From there, price then continues down. As it breaks this low, what is it doing? It's creating a new swing, right? So now this is a new swing, and from here we would expect expansion. Therefore, we are very safely covering this high and anticipating price to trade lower, which it does, right? And what I said to the group, once the guys had entered and, this sort of nice big candle printed, and then the next one just pushing through these lows, I said pretty early on, guys, let's, cover the risk to hit. At least that's what I would assume a lot of people would do, right? And then at this point, when price is now absolutely hammering down, every candle is going in our direction, at some point you would have gone break even, completely risk off the table. And of course, as you guys can see, it eventually went and smashed the target. Somebody in the group was actually saying, should we hold out the trade? There's potential to run lower. Of course, there's always potential to run lower, right? sometimes you can leave a runner. But in scenarios like this, where we know we have a target where price could potentially reverse from, like it did here, it's better to just take it, right? Just take your 2.3R and just sit on it, and, let's see. And then potentially what might have happened is, maybe we come back to it and it's a London to New York OTE, you get a secondary trade, you can trade lower. Right, but as you guys can see, that was a very, very basic trade, right? What sort of started that framework? We have a very easy daily candle read. We know we want the daily candle to go lower. We have a very easy target to work towards. Then you had very easy framework on the lower time frame, accumulation, manipulation, and then when the distribution began, you're seeing fair value gap printed, retracement, then breaking the low again, right? The second leg. This is all occurring at significant time, which is in the kill zone. So when you entered around roughly the midpoint of the kill zone, maybe 15 minutes before where you would have come in, right? That's all you had to do. And then when price trades away, we start managing the risk, trim the stop loss, that's about half, keeps going, trim it a bit more again, you'll basically break even, let your target get smashed, happy days, right? Very easy. Now, let's take a step back again. Euro GBP coming into the day. Coming into the day, we started with a previous daily high run, previous daily low run. When we see something like this, we want to see price trade higher. Once this side is run out first, which is what's occurred, right? You guys can see we're coming from the previous daily low sweep. We want to see price run higher, right? Very simple, and that's essentially what occurred. And that just gave us the bias for the day that today we want to see Euro be stronger. And that's what occurred, right? So we've got Euro USD being the stronger pair versus GBP USD. So move this for a second. So if you line up the times approximately halfway through the session, the 15-minute candle before the midway of the session is about there. And you would have paired your long entry, as you guys can see. Look, we have a matching fair value gap with DXY, that initial displacement, right? And we also have SMT, where we're not getting a run on the low, whereas DXY did have a run. And from here, run into the 4-hour fair value gap, that is, guys. And then from here, what you would have done, entered somewhere around here when DXY is lined up. Stop loss at this low. And you would have probably exited the trade roughly around here, which is about 2.6, 2.7R, depending on exactly where you got in, right? And all you had to do was monitor the DXY, and you were onside for Euro, so it was a very easy trade, and Euro just absolutely flew to the entry. If we quickly take a look at GBP USD as well, it's not something I really looked at today, but it would have given you about the same result, right? The entry would have been around this time. If you took the trade, you guys can see it clearly has that run on buy side, and it was actually, pretty much the same move as well. So if you took the trade on EVO, it would have been decent, right? Pretty simple. So yeah, that's sort of its own thing. That's the London Open trade, the one that I sent screenshots in for. I hope all of that made sense to you guys. If you need any help with that in specific, just drop a message below or in the chat and we can go over that. So cool. The next thing to discuss is, okay, cool. Right now, as a London Open trader, I've taken the trade, it's hit my take profit, blah, blah, blah. We've got this massive range and we've only just barely touched the higher time frame PDA rate, and we know, right? So now this is what's important, right? We know we have the ability to dig lower. Why? Right? I want you guys to just ignore all of these up candles for a second, right? When this leg, right, this whole price action formed, right? What it looked like was, you have this. Now this is going to be, I would definitely note this down, guys. It's very important. This is what the daily candle looked like. You had a massive wick on the top and you have a large body with no wick on the bottom, right? This is how price is looking, because you have this run up, which is your wick, and then you have this body being created, the bulk of the movement. So at this point, what we would expect, right, from this is perhaps this body gets a bit smaller, right? Leaving a little wick for now, right? Leaving a little wick. Why would it get smaller, right? Is because that's when price is retracing, But when we have a candle like this, I would anticipate the high of the day is in, and I would like to see the DXY trade lower for the time being. I would like to see the DXY trade, even if it was just one more push, right? So essentially what we wanted to see was an OTE of this whole range, which comes in London to New York OTE, which is a model I've taught you guys. And particularly, we were just paying attention to the premium zone. Because when we have like I said, again, coming back to the daily candle, we're zooming out. So when we come into the New York session, just because we traded in London doesn't mean you have a concrete bias and, you just go straight into it. You reassess. More candles have printed. Just see what you want from price. How's your daily candle looking? How's your 4-hour candle looking, right? And if we go down to our 4-hour, right, what do we see? This was a London candle. And then come in, right, this was the next candle. We could imagine that the next candle from here begins to trade lower, right? Or rather, I think it will be a bit clearer on TVC. The timing is slightly different here. But essentially, yeah, we would have wanted to see the next candle trade lower, right? Back to that capital chart, yeah. But now you guys can see that is not exactly what happened. Instead, we've tapped the weekly fair value gap price has traded away. So how did we sort of, manage this? So the way I gave this to the group, what I advised them to do was, look, guys, we get a hit into the premium. This happens during New York, right? Price trades into this. So the session has opened, we trade into the premium, right? This is the 1-hour fair value gap as well. I know there's a lot of markings, it starts to get a bit messy, but we essentially trade into a 1-hour fair value gap, and then from here, this specific candle, the start of New York, you guys see how this candle closed? From here, I would like to see that next candle trade lower, right? Imagine this candle wasn't here, all these candles aren't here, just this one, very nice and wicky, coming from the premium. We would anticipate the next candle trades lower as per the bias. So what we did in regards to entry is when price hit the premium here, we take the entry. Right, just above the equilibrium. And we cover the high the whole way, right? Of course, because we know that it's the invalidation point. And we can just simply target the low, right? It's not massive RR, but it would have been a very nice and simple London to New York OTE. And in this instance, what I said to the mentorship was, we trade lower. We took that first sort of last swing low that was left behind on the lower time frame. So when this low, I'll mark this out for you guys, was hit out, I said to them, guys, go, let's cover this swing, right? For almost everyone in the mentorship, that would have been near enough break even. If not break even, it would have been a very, very slight loss. And then what started happening, right, is we see price trade against us. Initially, you would assume that this is a retracement. When we started seeing, this sort of candle with a bit of energy, I'll get rid of this specific big candle with a bit of energy heading for that intermediate stop loss we had, I told them just close it here. This kind of moved pretty fast, so I don't know if anyone closed. If they closed, it would have been very minuscule profit here. But it's essentially the same result. It would have been break even if it did hit your stop loss, as long as your stop loss was here. And that's what happened to everyone. And I said to them, look, guys, this is still just about midway through the session. There's a chance we can, hit deeper into this premium and then trade lower, right? And that's what we started seeing again. So now prices hit that high and we had this nice wiki candle. And from here, I wanted to see price trade lower. But for me to be convinced from this swing high, I would have liked to see a fair value gap printed in this direction. If a fair value gap was printed in this direction, right, going down, disrespecting this, then what I would have potentially considered, right, is just, let's assume a fair value gap got printed here, completely obliterated this fair value gap, then I would have just entered a trade here, market enter, right? Once the candle closes, cover this high, because now I would assume this is the session high, especially if we're printing fair value gaps in this direction about halfway through the session, supported by the rest of our framework. And I would have just targeted this, and that would have also been a nice setup if it was offered. However, you guys can see the trigger was not pushed. There was no fair value gaps printed. I told the group it's probably a good thing that we stayed sidelined, right? Because you guys can see after it just absolutely ripped the other way, and it is not what we wanted from price at all. But yeah, guys, that pretty much, I think that covers the approach to the day, right? You guys, again, you might have to go back through it, but there was a specific approach to the London session. There was an expectation. The expectation in this scenario was, look, we had that 15-minute fair value gap. Price respected it. So if it shows willingness to break this low, we can enter. Euro USD was the obvious choice. We used it, entered, take profit. Simple. We'll come to the other side. We had an expectation for NY. Initially, it fulfilled that. We had the risk managed very early on, so we didn't take a loss. And then we waited for a second entry, but it just wasn't offered. Right? Simple as. That's just how you treat the days. You have expectations. Sometimes it offers what you want and then it turns around. But as long as your risk is managed, you get me, it's not going to hurt you. It won't hurt your account. You shouldn't let things like that hurt your account because you're not always going to be right. So, very interesting now. The last thing I'll leave you guys with, quick midweek outlook. What do we expect next from price? It's in a very interesting area. I think, it's a bit of a consolidation now, especially because we've taken this high. If we then trade back down, it's looking like it will start to get sideways. However, tomorrow we do have news drivers. We have news drivers in New York kill zone, I believe. Yep, we have unemployment claims tomorrow and we have President Trump speaking. Because of this, I'm going to be very cautious. Like I said, we do have Trump speaking tomorrow, and already you can sort of see this could start becoming a consolidation. What I will say is, if we can get a very nice kick up, we have a chance to work back up towards the highs. If we get a massive kick down and price closes through this weekly fair value gap, right? Let's just assume we smash through this fair value gap. Then, guys, I would say that is a pretty good scenario for us as traders. I think we'll have a very, very nice trend to trade off of eventually. If we can absolutely hammer through this, show some conviction, it will be good. So where I'm now with the midweek outlook, right, there's just not much going on. I think tomorrow might be a day potentially we have to let pass. You just have to see how the day shapes up. If I can, I'll drop a few messages in the main chat, so make sure all of you guys are in there. And if I'm seeing anything special, I'll let you guys know. But yeah, and just quickly we can brush over the other ones. Euro GBP quickly going into tomorrow. So again, coming from a previous daily low sweep, we took the previous daily high, but it is likely we will see price trade higher, especially towards this. I believe it's a weekly fair value gap that we had targeted. Yep, untouched weekly fair value gap. I want to see price work towards this. The candle's a bit weird right now because we've been pretty consolidated, as you can see. This is the current week. It's just very sideways. But if I had to bet on picking a side, considering we're coming from a sell side sweep now, sweeping all of this area, then it's very likely we push higher into this. So I'd anticipate Euro to continue higher. Once we can hit this, if we get displacement down, very nice trend line to run out and to see Euro lower, which would be great paired with this Euro GBP news that's coming up on the Friday, right? Bitcoin, I probably remember from the outlook, did exactly what we wanted. We said coming from this type of weekly candle, we expect the next week to go higher. We had a buy side target, it's taken the buy side target, took the target, retraced to this daily fair value gap and pushed a little higher. From here, I would like to see price higher as long as this daily fair value gap is respected. Does look like it might go into a bit of a consolidation here. But if somehow, we're only 3 days into the week, we get a big push up and we can close with a very, very strong close, right? Like a nice solid body through this high, then it's likely even past that we're going to see higher prices on Bitcoin. All right. And lastly, S&P. Yep, exactly what we wanted. We wanted continue expansion to the highs. I told you guys, we're looking for a market maker buy model. That is definitely in play. I know we're very close to the highs already. We basically touched it. But yeah, play to that target. If price hasn't taken that out already, let price run the buy side. Once the buy side is run, I would just be a bit patient, especially like I said to you guys, with Trump speaking tomorrow. You might see a lot of consolidation with price action until he does eventually speak and say whatever he's going to say. And then hopefully the Friday will be a lot clearer. And even on the Friday, I'll be a little bit cautious with the London session, considering you have 1, 2, 3, 4, 5, 6 red folders just in London. And then, of course, a couple for the USD in New York. But yeah, guys, quite an in-depth video. I hope you guys enjoyed that, took something away. If you like these type of videos, just make sure you let me know. If you guys want to see something different, also make sure you let me know. and I'll see you guys in the next video.